Hello, welcome to InvestStream live with Rahul, Chandra, and Ankita Vashistha. Today we're going to be talking about the rise of VC in India. Ankita, Rahul, thank you so much for joining me today.
Thanks for having me, Pankaj. Thank you.
It's been a while since I've had a chance to catch up with both of you, so this is a good excuse. So Ankita, let's start with you. You are the founder of the Saha Fund. It's a women-focused fund out of India. Could you tell us a little bit about your background and Saha Fund? What prompted you to start Saha Fund? When, your portfolio thesis? Let's start with that.
Yeah, sure. So, I'll just give you a quick background. So I come from a engineering and finance background, and very quickly got into private equity, starting off with working in London for a CDC-owned fund called Oreos Capital. At that time, it was a $2 billion fund looking to invest in the emerging markets, sector agnostic, but investing in the regions like Asia, Africa, Latin America. So during my time there, I did global portfolio management and also global fundraising. And we kind of successfully raised money for 3 funds at that time. It was an India fund, a Southeast Asia fund, and an Africa. Hi. Okay. So I got a great experience of looking into the emerging markets. I was there for a couple of years, and then kind of wanted to move back into the region, moving into. So I moved to Singapore and India, and I said, okay, I'm very interested and passionate about bringing solutions, innovative solutions into Asia, but I want to work with younger teams, who are working with new tech, have fresh ideas. And really kind of building solutions, and solving real world problems. So I set up my first fund that time called Talon's Capital, which was investing in early stage tech companies in India, Singapore, US, and Philippines. And from there, I also launched an innovation lab called Wavemaker Labs, which was based in Singapore and was funded by the Singapore government under the technology incubation scheme, which did very, very well. One of our companies called Luxola became Asia's biggest online cosmetic store and got sold to Sephora. And that was a woman founder. Also at that point, I joined a bunch of angel networks. Of course, today there's like so many angel networks, but at that time there were very few, and one of them was Indian Angel Network. Where you have these monthly meetings, you meet companies. And I realized while I was there that, there'd be these monthly meetings and there'll be 50 investors coming in, but I was the only woman, right? And also if there were, male and female co-founded companies, always the male co-founder would be the CEO or they would present. So then I realized there's this huge gap that needs to be addressed in terms of, having funding available for women-led companies, but also having women investors, right, to be able to make these investments. So that's when I said, okay, I want to do my next fund now, but I really want to have, a focus that I feel can really make a difference, can really address a gap. So that's when I launched Saha Fund in 2016 to invest in women-led companies. And the thesis is to basically invest in tech-enabled companies that are women-led or are focused on the women consumer. So companies, that are basically promoting women entrepreneurship, women engagement, and women employers. So that's Saha Fund's thesis. It's an early stage fund where we make seed and pre-series A investments. So our investment sizes can range anywhere from 1 CR to 6 CR so we invest in pre-series A and then we follow on in a series A. So that's how we are invest basically in Saha Fund. And I'm actually currently just launching my second women fund, which is going to have a global focus, India, UK, US. And the idea is, again, so there's so many women-led companies out there, which of course I feel have global similarities, but there are local nuances. So looking at femtech, future of work, fintech, and education tech.
Okay, cool. That's a lot going on. Rahul, you have been a VC in India probably longer than anyone else I know. maybe one or two other people. And you've kind of seen, multiple.
Before I knew I was a VC.
Yeah. Most of us didn't even know what VC was back then, right? Or how to spell it. So you've seen a lot of cycles, a lot of hype, a lot of disappointment, and over time you've seen the infrastructure across venture and startups kind of really build up and solidify, right? And you've run multiple funds during that time. So could you tell us a little bit about your current fund and how you got here, and what is the thesis? I know it's a very different thesis than Helion and Unitary Helion, but for the audience, let's dive into a little bit about why you chose a very different thesis rather than the broad-based B2B, B2C folks that a lot of the other funds have taken.
Sure, Pankaj. Thanks for having me. And I still remember the falafel we had around the NYU campus a couple of years back. It'd be good to repeat that sometime in the future.
Yes.
So we rebranded Unitary Helion, which is what the working title was, into Arkam Ventures, ARKAM. And you're right, Arkam is very different from Helion, which is a fund that came about in 2006. Markets were a little different back then. We felt that India is ready for, going a little bit more deeper than just staying more horizontal, which means that things that we know well, things that have worked well, things where we have seen success in the past, why not double down on those? And obviously the trade-off is that either at some point we say that this fund can become a $250 million fund just by this focus, or we'll have to go back and tell our LPs no, that we are giving up and we feel that there is need to go more horizontal, because in all VC businesses there's always this upward trend of funds that are being managed, fund sizes that need to be raised, but we felt this was the time to actually double down on what we thought has worked, and that was one reason. And if you circle what has worked for us, it was one learning that if you take away all the low cost capital that investors provide to startups in India, then the staying power, the monetization, the growth by itself actually peters out very quickly. If you are focused on the market, which is the top 15, 20 million, let's call them well-to-do Indians. So we had experiences where we've seen billion-dollar IPOs come out of the investments when we made for the middle India. And this we felt was the most underserved and the and the largest market opportunity. And we felt that post UPI and Aadhaar, there was a nice set of digital rails that public utility had built for us to access customers in this market. So we felt that let's go after the the bulk of the wallet share, which was in 3 buckets, actually 4 buckets: fintech, health tech, food and agri, mobility and logistics. And these are, as you can tell, are fairly necessary, essential spends that any household will make in Middle India. So we felt that here we can actually find companies that can scale by the pull of what they're providing, not by the push of needing to acquire customers at expensive CACs and then try and build economic models to work around that. We felt that it would be easier to find scale and build companies that can last and sustain themselves longer. Pankaj, you're muted.
Sorry about that. So I know you've done one investment out of the new fund already. Could you share a little bit about that particular investment?
Sure. Actually, we have 6 investments. So the last quarter has been
So COVID lockdown has kept you quite busy. And,
besides growing this, I'm also investing.
yeah.
So yeah, I can talk a little bit about the flavor of, and why this and how this translates into some of these exciting startups. So we have invested in one of the larger digital lending platforms a little bit, actually before COVID happened. But it is the one company we feel has done a very good job of converting thin credit files for middle India into thicker credit files. So there's a much better credit view on customers from middle India based on the way they've done it at scale. They have 1.5 million customers, and they're growing and generating more data than we have seen get generated about middle India. Second one is Jumbotail, which is a B2B agri supply chain company, which provides delivery of branded and unbranded items for Kirana stores, which is 98% of where India shops still, despite some great brands like Big Basket. So that's what we feel that is going to be an essential place where most of middle India is going to continue to buy their grocery and daily essentials from. Third one that we've announced is Jai Kisan. It is a team that has actually put together a model that solves a lot of the agri issues that have been challenging so far. Most of it was around end use. A lot of agri loan goes into the market, but there is no linkage at all between making sure that that money is going into actually producing an agricultural outcome. It could very well go into spending on a motorbike or a wedding. So the revenue generation that is happening at a farmer end is if you link your loan to that, there has to be an outcome at the end of the day, and there is a pretty high quality loan right there, because once the farmer sells the harvest, there is a cash flow which you can then get your return from. But for this, you need to tie up with the the distribution, the companies that are part of this value chain. And the way Jai Kisan has done it is a very strong integration with various players, including lenders, but also the equipment manufacturers, the fertilizer manufacturers, which these companies have a very clear view, strong view, distribution capability. That's one side of the loans, and the other side is the working capital side, where a farmer can it generally tied up to a company that is doing contract farming. So let's say chips for Lay's, you have to harvest the potatoes, and Lay's will buy most of that produce. That working capital gap is what this company can go and then fund, because there is again a very finite outcome at the end of the harvesting cycle. So that's the third one, and the others I'll cover quickly. One is in the health tech space. We believe digitization is really is getting pushed by hospitals. There are about 150,000 hospitals in India. Most of them have underspent on tech, and COVID has really been a good incentive for most of them to drive harder on digitizing their services. I mean, we normally spend 90 minutes on a 10-minute consultation, and it's a big loss of revenue for hospitals, and this company is pushing harder to actually make that patient flow more efficient. The other one is a digital banking API company. It's deployed already with most of the major banks, and we see again a very strong push by the banking sector in India to adopt digitization, and we are seeing growth in this one as well. So we feel there is I think a good basket of companies now that we have put together, which are mirroring the thesis that I just talked about.
Interesting. Ankita, you have for the last couple of years focused on women entrepreneurs. Are you seeing more women entrepreneurs targeting the type of middle India that Rahul's talking about, or are you still seeing more and more companies focusing on the tier 1 cities across India that we've seen over the last 5-10 years?
No, actually, I mean, whatever Rahul is talking about, that thesis. So we see actually a lot of women-led companies targeting that segment. For example, as I'd mentioned, one of the companies in our portfolio is Love Local, which is called Mpani before. But they also basically help Kirana stores go digital, right? So they started off as being a loyalty program for Kirana stores, providing that dashboard for them to be able to manage their inventory, attract customers, create loyalty. Now they've also extended into last mile delivery of essential goods. But basically, they've created a platform for Kirana stores to basically go digital and be online in Bombay and expanding to other parts of India. But of course, I think, and then we have one company which is Fraternity, which is into basically, I think it's India's largest online platform for wellness options around you. Looking at gyms. So now they've also actually added on kind of diagnostics and clinics. So I think the India story is the consumer story, and I think majority of that consumer is Middle India, as Rahul was talking. So, and a lot of the companies that we see, so we also had a company called Go Co-op in our portfolio, which basically has helped artisans and cooperatives, again, go online, right? 80% of them are women-led. So, we've seen so many of those trends in small and medium businesses being women-led and women-focused.
So there's an opportunity here, I see, between the two of you to kind of help each other out with some co-investing.
Yeah, absolutely. Look forward to that. Thanks.
Yeah. So, a question for both of you, and kind of what we really want to discuss today is, the rise of first-time managers and new funds that have been popping up, especially in the last 3 to 4 years. And, kind of what your views are on what's driving a lot of the new funds. Where is the money coming from? One of the biggest challenges that I think, Rahul, you can probably talk to this very well, was early on, there wasn't a whole lot of domestic capital available for a venture fund in India, right? So a lot of the money was coming from overseas. Today, you have lots of domestic capital, as well as, Chinese, Japanese, European money pouring into India. Maybe not as much American, but on a relative basis. But even Middle East, a lot of money's coming in. So, I'd like to hear your thoughts on what's really driving all of these new funds. Where are they going to raise money from? How are they differentiating their thesis from existing funds that have been doing this for 10 years, right? Like, and specifically at the early stage. I think late stage is a whole different ball game, and is probably a whole nother hour-long discussion to have. So, let's hear from you guys what your thoughts are.
Go for it, Ankita. I'll follow you.
Yeah, sure. I mean, in 2015, when I think I launched, Saha Fund, I realized there was this whole rise of the new angel investor, right? I think it was a lot of the new generation coming into, their family offices, managing their money, and there was this availability of new cash available for seed stage startups at least. So at that time, you saw so much of that happening, and of course, that was a time of really high valuations as well. But a lot of the early stage funds, I think, have also come about from exits that have happened. And, so you have these new entrepreneurs who have now become fund managers as well. And as I mentioned, a lot of family office. I mean, there's new capital also available. So, of course, I think still India lacks, investors coming in at the late stage, looking at a late stage Series B or Series C or Series D. But there's suddenly a lot of, I think, domestic capital at least available for the early stage segment. Venture capital on the whole, I mean, I personally still feel for an investor in India is still quite nascent, because I feel a lot of the large, kind of ultra HNIs and, the large business houses, of course, they first want to invest in themselves. And then a lot of it goes into, say, real estate or the stock market, and private equity, and of course, venture capital then. But yeah, so a lot of it has now, I mean, now I think there's a lot more awareness, and there's more, family office, which is coming into the play, investing into these early stage funds. But yeah, I mean, I think today's fund manager is someone who's been a successful entrepreneur / operator, and also being able to kind of build, say a more kind of global exposed team, and really looking at, solutions that can really be scaled up across markets, right? Because something you build in India can go abroad, and something abroad can come here. So yeah, it's a diverse set.
Cool. Okay. Rahul, what are your thoughts?
So this morning, actually, I was speaking to somebody. We connected on LinkedIn, but the place where I saw them was, a deal announcement, and then there was this fund in Delhi, which actually has only individuals as investors, but it is structured like a fund, and I don't know if it's a on-call capital or is it a dedicated pool of capital. But I ended up speaking to one of the individuals in that fund this morning. And Pankaj, I was blown away by so this person was in Ahmedabad. His family is in the real estate business, and he took a break from that. No big family office, so it is not like he doesn't know what to do with all the money he has, and that's why he's investing. But he's actually thinking in a more mature way about how to progress. What is at this moment more of a personal portfolio. He already knows, how to, how he has progressed to becoming a syndicate leader, how he will set up a seed fund. So I think in so many minds, and by the way, this is in Ahmedabad, like I mentioned. So it's amazing how well understood this pattern is in terms of make a few investments, get some results, and then pool more capital. So what is driving this person obviously is his sense of how much capital is around and available to him, maybe in his immediate proximity in Ahmedabad. But that's how, I think things are just adding up to, what I think is an amazing level of activity in India. In the afternoon, I spoke to Rajiv at Antler, which is, already in 11 countries. He's an ex, like you mentioned, he's an ex-entrepreneur. He's done Urban Clap. So the kind of people coming in to now get startups going, the early stages, with the kind of lessons that entrepreneurs have had, it's just phenomenal. And of course, there's a massive pool that is waiting to actually the first pitch deck that we made at Helion in 2005 actually had a map of where do we stand, who's doing what, and there were, I think, only 5. There was no Matrix, there was no Nexus, there was only Westbridge and a couple of other funds, and we just had a very simple here we are a fund, founders for founders, and we like to think from founder first perspective. And when I look at things now, it's beginning to look a lot like, or at least beginning to early signs of what happened in China in 2014. Till then, from 2006, when China also started on the venture journey, most of all of the capital was USD. So it was a dollar funding VC funds in China. And then in 14, the renminbi backed funds actually overshot the total AUM of USD funds. So the domestic capital started, year after year, it was stacking higher than what USD funds were. So domestic capital finally, came together. I think, there's a challenge, as again we have talked about, where the size of this capital may not be enough to fall in the risk category. But if you compare, our first slide and what's happening now, just look at how many more entrepreneurs can get that first capital, second capital, and get going. And suddenly you have a institutionally backed or a organized capital, not borrowed money from parents or uncles. Here there are people evaluating the best deals in a fairly intuitive and mature manner. And again, this is a massive jump from 2012, Pankaj, when I would be part of business plan competitions all over the country, which didn't have anything other than prize money. So the process has now become like you come to a syndicate, we look at you as a, with real dollars, with real INR, and we will actually put a check in. So it's I think the childhood game has now become real, and it's actually happening all over. So it's very, very exciting.
So what do you think the maturity is coming because we're seeing more successful exits? Do you think the maturity is coming because there's just more awareness and better education around starting and running a company? What do you think is driving this? I mean, from the exit side, I don't think that there have been enough exits across the Indian ecosystem. So I don't think.
Yeah, I absolutely agree. I think they are, but there are still quite a few. Think about it. Infosys was the only large outcome of a tech company in 2006. So we had nothing to show. And Daksh was the other one which IBM had acquired. So there were, maybe 3 or 4. Make My Trip had not happened by then. Now, if you again, sorry, Naukri had gone public. I think so. It had gone public. Yes, but I still feel while there are quite a few examples, they aren't enough to drive people to get their checkbooks out because they have not seen that capital come back. Yeah. So there is no flow of returns on their past investments that are happening. I think what's like what even VC firms are banking on is the potential, and people are consuming these services. So I take an Ola. Ola is a venture-backed company. It started with 2 taxis. Or I order on Big Basket. These were 3 entrepreneurs who started in 1 room. So I think that story, where you are actually seeing a Big Basket sitting next to a Reliance or an Amazon, and you think backwards and say, okay, I could have been an investor in a company that is a household name. I think that opportunity is what is driving a lot of this capital.
But at the end of the day, people want to see some sort of return, right? And I think a lot of angel investors that have gotten in early have seen returns because of secondaries, predominantly secondaries, but in some cases, smaller exits. I think the sub $100 million exits are becoming a little bit more frequent. 20 to 50 million, I think, is kind of the bulge bracket of where acquisitions are happening. But I still think that the returns part of it's a tough story to sell, right? And the whole, yes, there's a lot of potential. That's a story that we've been hearing and telling for a very long time, right? But it's still something that hasn't come to fruition, right? So I think that the long-term potential is massive, but at the same time, the proof points are far and few between, right? And as a fund manager, and having spoken to many other emerging fund managers, how do you sell that story to institutional LPs? How do you sell that story to high net worth individuals that have been watching it, perhaps have been early investors? Ankita, you're in the process of going out for your second fund now. Rahul, you just raised money. So, what's the story here? I mean, how is the story changing, or is it the same story that, some of us were telling in 2010, 2012?
I mean, just from my perspective, I can speak kind of running a woman-led fund. I think for me, for the first fund, there were 2 stories. One was the India story, which I think it's still a very exciting story, right? I mean, of course, so we've had the Flipkart exit, etc. And I think the Indian consumer story is exciting for people, right? In India and outside of India, people want to diversify and come into Asia, and so they look at China and they look at India, and they want to get into India right now as well, right? What's also, for my fund, a lot of the people who invested, they really wanted to back diversity and inclusion, right? They want women to be part of the workforce. They want women to lead the change, and that's why, therefore, they have invested, right? Because pretty much 50% of your population is women, but why is only 5 to 7% still being funded, if at all, right? So my investor set is something. Are people who are really passionate about, I think, investing in innovation, They really want India to accelerate their innovation, the startups, and also kind of, take traction on the kind of middle India consumer story, but also, really promote women-led investments, right? So I think from that perspective, it's still interesting. Of course, as you mentioned, there are exits, but you can't compare to the exits and the quantum of exits that we have in countries like the US. But I think we're still a very interesting market. And I think India is known for also frugal innovation, right? We have great tech that we have built out, at very low costs, which is also very interesting, right? So how can we take this innovation into other markets? It's still very interesting, and I think something which can definitely be scaled up. So I think that's why it's still interesting for an investor.
And the way we have, what we have told our LPs, Pankaj, is obviously, every investor would want to look at your past track record. And, in some ways, at least what I can count are, 6 exits out of 14 investments. And I'm pretty, I'm able to show that the balance, other than the ones that have that no longer exist, there is a very clear path to exit as well. So, LPs would generally look at, 2 things. First would be, is it meaningful enough to generate a return on the fund? And, on a fund which is smaller, that is obviously relatively easier compared to a much larger fund. And 2 is, and so there is enough evidence of that happening in India, where markups are actually looking good to show that kind of return. If you look at Helion track record, we are able to show those kind of returns that have happened in the past. There've been exits, there've been IPOs, strategic sales. So I think that in pockets you will find capital returns happening. The other thing that would get kicked around, the tires would get kicked around for, is that valuation simply a creation without any backing? So investors would be discerning enough to correlate whether this valuation is way out of whack for where the revenue is, or where the metrics are. And so there'll be some kind of a linkage between your valuation story and your reality of that. So I think in terms of money back per se, I would just say there are pockets that have done that, but it is not definitely not like all of India is generating a lot of liquidity for LPs. And I think there is a reason for that. And the reason is that I think the secular growth in India that was happening till about 14, from almost barring 2008, almost gave the sense that businesses are going to grow. Lot of VCs actually ignored exit possibilities because they thought the next year is going to be better. And the offer was, hey, it's not large enough, we can make more, let's stay in. So a lot of opportunities came, and VCs just tended to push out their exits. So partly I think it is linked to that. And then of course things happened, which was, so the orientation of a VC to say, I need to get an exit, let me find a buyer, even if it's a secondary fund, let me find ways in which I can actually get money back to my investors. That was pushed back, just to say, okay, we are compounding every year, even if it's 20%, that's good. But the need for liquidity was just felt a little bit less. And of course, the cows came home, and now of course it's a very pronounced requirement by LPs, and they're saying the same thing about China. Liquidity from China is also nothing to talk about.
Yeah. Who are some of the funds, the newer funds that both of you have been kind of tracking and keeping an eye on, or perhaps starting to work with, and what is it about these funds that has made working with them enjoyable for you guys?
So,
So I mean, sorry.
go ahead.
Go ahead, Rahul. Go ahead, Rahul.
So some of the new names, Pankaj, would be Venture Highway. They've had I guess good access to quality seed companies. You can by and large tell from their general mix of founder quality. I think they're also linked a lot to YC, and in general the businesses are quite exciting. Um, I think in terms of working relationships, not new, but Bloom is has certainly metamorphosized quite a bit over the last 10 years. They're far more involved in their businesses, and they're writing bigger checks to back their early ones. So continues to be a great relationship there. Venture Catalyst is another one that I'm beginning to see a lot of. Yeah, and 0 to 1
Pennies.
yeah, I think they're also doing several good investments, especially in the SaaS space.
Cool. Okay. Ankita, who are some of the funds that you started working with or have been tracking? And
I mean, the early stage
sorry, Ankita.
Yeah, some of the early stage funds that we've been kind of working. Hi, can you hear me?
Yeah.
Yeah. Great. Yeah. So one of them is I think Pi Ventures, which has a great AI.
It's okay. Don't worry about it.
Hello?
Yeah, don't worry about it. It's okay.
Yes, yeah. So I think Pi Ventures is very interesting because they've been looking at deep tech AI-led companies. One company which is very interesting, which we wanted to kind of co-invest with them, was Nirmai, which is doing stuff in the cancer detection area. And I think what's also interesting is stuff Fireside Ventures, which is investing in the consumer growth story of India, creating brands for India. Yeah. I think they're also very interesting. We've also co-invested along with Bloom. And Sixth Sense Ventures again, so I think they're all doing some interesting stuff for the India kind of brand and consumer story, which is very interesting.
Okay. Who are some of the folks that you guys have started meeting recently that are, you don't have to name names, but that are in the process of thinking about raising a fund or raising a fund? And what is some of the advice that you might have given to some of these folks? Rahul, you want to start?
Certainly to to show clarity of thought in terms of where the where the capital is going to be deployed. Why is that a differentiated story? Number two, I would say a lot of questions are asked about. Are you going to get crushed by elephants? With your small check size. So are you going to look at things which are more capital efficient, or are you going to look at the more high burn consumer side businesses? I think that's a very big question most LPs have. And in terms of actual practical, just while you are at it, the best thing to do is to to keep investing and either warehouse these or write smaller checks, but to be able to showcase real companies that are reflecting the thesis. There is no better argument than to actually show a portfolio. And the sooner a fund does that, the closer they get to getting commitments.
Okay, nice. Ankita, I'm sure lots of other folks have approached you also, and I know there's a couple of women who are entering VC right now that have reached out to me that are perhaps tuned in today, and a lot of them are looking for women mentors. So I'm sure some of them have reached out to you to ask you, how do they get started in VC? How do they raise a fund? What's some of the advice that you have given to them or would give to them?
Yeah, I mean, so just in the recent past, yeah, I know. So there are people who are kind of coming out with accelerator programs or smaller check sizes funds, right? So I think what's important is focus. I mean, for example, just from my learning, I think in my fund one, we invested in women-led companies and companies that were creating something for the woman consumer, but we didn't really have much of a sector focus. So I think one of my so now for the fund two, right, we're looking very, very closely at future of work. It's always been a theme that I've been looking at. Of course, now future of work is the new normal. But technologies that are enabling future of work and enabling people to work from home, flexible job options, etc. Looking at femtech, looking at inclusive finance and edtech. So I think one of the learnings is that to have a focus within the portfolio as well, which is complementary. Also, I think it's really important, to be able to have a path to an exit as well, right? So I think it's really important that you invest in businesses that definitely they've raised or raising smart capital, have the vision to really scale up and exit. I think that's very important, right? A lot of times, some companies think it's okay just to raise the first 2 or 3 rounds of capital, but they don't necessarily think about exit. So I think that's very important. And also just from an LP perspective, talking with LPs and of course fundraising, I think they also like focus. They also like to know, how are we really helping build these companies, right? What is our network? What partners do we have on board? What are we really adding value? What markets are we opening up? So if you can show that, and of course, as Rahul said, have a portfolio, invest well, build a track record, of course, from your past, but within the new portfolio, right? I think that makes a huge difference and gives comfort to LPs. And I guess it's great pointers for people who are currently trying to raise a fund as well, right? I think relevant experience, having a focus in mind is all very helpful.
Wow, great advice. Wish somebody gave me that advice a couple of years ago. We got a question from Grishman. The role of diversification in the VC industry. Now, I'm not sure exactly what he's referring to, but let's talk about, within the workplace, right? On the VC, the GP side, diversification on that side. Now,
Is it diversity or diversification? Seems like he's comparing it to the public market, but if you want to talk about diversity, I'm game as well.
Let's talk about diversity first, and then maybe we'll go into diversification after that.
Sure.
Okay, so on a diversity side, right? Yeah, you're right. I just saw this other comment about public markets, but on the diversity side, let's talk about that on the GP. A lot of the fund managers, at least the ones that I've come across with, are a lot of men. There are relatively fewer women at most GPs. When you go to a conference, most of the people that you meet are men. How are both of you thinking about diversity within your funds and your organizations, both from a portfolio construction perspective and also from an organizational perspective, right? Like, as an organization, is diversity an important part of building your business out? And how are you approaching it? So, Ankita, let's start with you, because yours is a little interesting. You are already diverse, but now, what does diversity mean to you as you're building your organization and your portfolio?
So, of course, I mean, Saha Fund is a diversity focused fund, from the fact that, of course, we're 2 women co-founders. Again, looking at women-led and women-focused companies. But diversity, I think what's important is also the portfolio companies themselves also thinking and implementing diversity, right? So, I think it's great to think about it, but it's also really important to act upon it. Just to give you an example, right? So one of our companies was doing a huge hiring drive and interviewing people for a particular role, and they had probably like hundreds of people show up, and both men and women, and they gave offers to equal number of men and women, but then people who actually signed up were pretty much only the men. I think out of maybe whatever 50 people, just 2 women actually signed up and joined the job. And then they realized that so far in the past, for all their hiring drives, the people who have been interviewing these people have all been men. So in their next drive, in their hiring drive, they actually made sure that there were women there as well interviewing. And believe it or not, 50% women actually joined the role, right? So that's the importance of diversity. I think employers and corporations need to provide that comfort for women to come to work and feel comfortable about the fact that they will be understood. There will be an environment for them to be able to speak and really engage, right? So I think diversity is led by example. So senior management hires, senior management themselves have to be representative of that. Small things like, for example, I had when I had gone to meet Shikha Sharma of Axis Bank at that time. Their head office in Bombay, their ground floor has a huge play school and creche. And I was like, oh, wow, how come you guys have this? And they were like, oh, because we have so many women employees, right? They actually leave their kids there. And because of that, we've had so many women actually join and be part of the bank, right? So small things like these, which we might not think they're important, but they make a huge difference when to really attract talent, especially women-led talent. So I think that's what diversity is. It's very important to create that kind of environment for women employees, women entrepreneurs, to be able to create and inspire and lead by example.
So Ankita, Rahul, before we jump to you, Ankita, question. It's a very homogenous society in the sense that, you're not going to have a lot of different racial diversity in India. There is some, especially in the Northeast and all, but for the most part, it's a fairly homogenous society. So beyond the gender diversity, what other type of diversity do you think about for your organization and for your portfolio?
I mean, of course, as you said, I think in India it's limited, but of course, there's so much happening outside of India. So for example, for our next global fund, we are looking at racial diversity as well, right? There's a fund, I forget the name, but I think last year he just launched his first fund, which is I think a small $50 million fund. I think just the day before I read that he's now been able to raise $300 million. So I think it's very important. So in the US, for example, there is so much happening, even from the academic level itself, right? When you're applying for undergrad or graduation, Hispanic, Asian, whatever it may be, right? So I think it's very important to have racial diversity because culture and experience and global exposure also is a huge value add, which sometimes we don't realize. But I think having cultural and racial diversity is a huge plus as well. I think this all brings about positive culture within the organization.
Yeah. Okay. Rahul, what are your thoughts on diversity at Arkam?
Right now we are 4 men, so we are as far removed from diversity as we can be. But it's not like we actually, when we get together, we are not talking about cricket scores or or whiskeys and cigars, and I think we're probably talking about children issues or admissions, stuff at home. So I think from a culture, we are not trying to make it an alpha male, and thankfully VC is a lot about collaboration, right? And at the end of the day, we are used to the to making the best decisions out of a whole bunch of thought processes that people bring. Diversity is actually a strength in VC because finally you want to amalgamate several different ways of looking at the world, looking at businesses, and I think so investing in diversity has a very finite outcome in VC. But like you said, Pankaj, in India there is that type of limitation. In in how much you can do it. But I guess first step first, when we looked recently for people on the investment team, I would say we would have liked to. We didn't make an extra effort to reach out to, making sure. And this was our first hire, so we weren't, but we weren't, like Ankita mentioned, focused on making sure that there was an equal representation between men and women. In the end, it was a pretty low ratio. It was, I think, 2 women out of 10 men who applied. So, we would have loved to see a higher ratio. Even 4 out of 10 would have been great. But for the next hire, we are definitely going to make sure that we are making that happen versus, just letting the cards fall.
That's good. And there are a few women I could definitely introduce you to that would be a great fit. So when you're ready to hire, let me know.
Sure. Thank you.
Yeah. Let's get to diversification since I misread that. So, diversification in the VC industry and kind of relative to public markets, or how is it different from public markets? Do you guys want to talk about how you approach portfolio construction? I mean, that's the broader question here, right? Ankita, you want to start, Ankita?
Yeah, I mean, I think in terms of our portfolio and looking at how we kind of allocate it, of course, in terms of early stage, so we're looking at our early stage investments, our first round of investments, and I mean, just in a venture capital portfolio, we look at what we want to back in the first round and keep for follow on. But also we want to, so I mean, of course, it depends. I think each fund has its own strategy. One is a very focused strategy, but I think you can also within the portfolio look at specific sectors. But also, I think for us, what's important is technology and how we apply technology to these sectors, right? So I think it's very important that we, even though we diversify by a certain industry and looking at different sectors, what brings them in common, what is being leveraged across them is very important, right? Because you want the portfolio itself also to benefit from some kind of common platform. And I think a focus in the portfolio also allows you to bring in great, kind of experts and advisors and mentors on board to add value to your portfolio.
Okay.
Yeah, sure. So diversity obviously is how 2 assets are correlated. If one goes down, what is the likelihood of the other going down? At the LP level, there is already diversity in play because if they're investing in a certain stage of VC in India, they're very unlikely to do too many of those. So I think by default, that also comes to investors in India, where there are not too many similar assets that they would take exposure to. So, that is one level of diversity that's happening at the investor level. And our level in our portfolio, of course, there is almost equal risk when we are starting off for all companies to succeed or fail. At least that's what we would like to achieve. So there is not that much role of diversity within a VC portfolio that you can effectively then try and achieve results like you would in a public market portfolio. But would, if, for example, a Sequoia would do multiple investments in the same category, let's say EdTech or FinTech, we have experienced this in the past, and sometimes you like the theme a lot, and it is not a winner-take-all thesis, and there you would like to perhaps back one more play, if there is no direct competition. So there is clearly, I think less pronounced, let's not do one more of the same, because if it's working, then you want to do more of those, especially if they're not competing with each other.
Yeah, I think the flip side is kind of a 500 startups type of model where there's intense diversification, right? You're almost creating an index of the startup world, and you're investing in a lot of different companies across many different sectors, across different geographies, and in some cases different stages also, right? Like when I was at 500, we did some very late stage deals as well as some very early stage deals. And there are pros and cons to that model as well. But that's the other extreme of diversification, right? So I just
and by default, it has to be a very large portfolio.
Yes, yeah. I mean,
Yeah.
When I left 500 at the end of 2016, I think the portfolio globally across all of the different funds was probably around 1,700 companies in the portfolio. Just my portfolio was about 85 companies that I personally had invested in.
Wow.
So that's the other extreme of diversification, right? And you are naturally less hands-on when you have such large portfolios. So we have another question from Mrinalini. Essentially, she's asking, as more downstream investors come upstream and start writing larger checks at earlier stages, is it creating more competition for early stage funds to get into the best deals? So who wants to take this one?
I can go first. So these are obviously, the names you have, Axel and Sequoia, they've always been in early stage. I think Axel is doing now slightly more later stage, but that's also a different Axel. It's an Axel late stage fund. So it is not a movement, but yes, there was a time when, a hedge fund would come and write a Series A check of, 10 million. Those are times where, of course, it's a sign of the time rather than that particular deal, because it's happening across the board, because there is so much frothiness in how risk is perceived in early stage. So those are periods, and just like the economy, very clear troughs and crests in the VC investment cycle also. There's always a peak, and then there is always a fall. So somehow, if you go back 20 years, the fall is the best, the best phase to actually make your best returns. The best performing funds happen during the times where fewer people are investing. So I think it's a pattern that's been happening for the last 20 years.
Yeah. Ankita, you want to add anything?
Yeah, I mean, just in terms of access to capital and what it means for the pipeline, I think it all depends, again, on your focus and also your network. I think, again, from my perspective, there was a lot of access to deals that we got just by being, the first of its kind. And of course, the focus that we have. Also, in my case, for example, we co-invested, on deals with the IDG. So at that time, they were not looking at seed stage too much. They had just in their new fund at that time, I think, carved out 20% or so for seed. So there was a lot of deal sharing happening as well. So I think it was complementary for our fund from that perspective, because we did 2 deals together at that point. So I think it all depends on your network and relationship within the industry, your focus, and of course, over time, there will be a track record which you build and a name that you have. And then people will know that they want to come to you for their capital because they know that, you will add value to their business. And I think that's what a smart entrepreneur will look for.
Yeah. Okay. I know we're a little bit over time. I have actually 2 more questions for both of you before we wrap it up, if that's okay.
Sure.
Okay. All right. So in your opinions, what areas of the Indian venture community need significant improvements or changes?
I think one is, so your point, Pankaj, really, the way I would read it is, what can VC firms do better?
Yes.
And
this can be a broad question. What can a VC firm do better? in terms of helping the overall ecosystem, or it can be what can they do for their portfolio companies better, so that's more micro, and anything in between, right? So it's a very broad question, and I purposely am asking a very broad question so that you could put it into your context and kind of see like, hey, this is what I see wrong with this industry, or other firms aren't doing as well, and this is how I want to do this differently, right? So sorry to cut you off.
So sure, no thanks, that was helpful. So I would say that again, despite everything and the excitement and the number of funds we are seeing, the specialized funds are very far and few, and so some sectors which are best understood by practitioners or by people who have come from that sector, let's say something in biotech, drug discovery, or medicine delivery. That's an initiative that is quite lacking in India, and it may be that it's just where we are at this point of the cycle. And going forward, there will be people with successes in these spaces. So I think there is a SaaS fund that's coming together, which is only going to do SaaS. Like Emergent in the US, Emergence, they only did SaaS, and they picked some really good deals. I think it's a factor of how much depth you can get from just chasing one. That's one. I think more tactically, VCs in India tend to, actually most investors in India tend to do less referencing before they invest than they should, I think. So a lot of misdeeds get forgiven by a second check that happens. And those misdeeds could be, where the founder has not been fully honest with how he ran the company, so on and so forth. So I think some of that back channel through references, you can just make sure that the best quality people who have actually worked, very hard to, deliver returns for their investors. Because there are some pockets still, where raising money seems to be the be all and end all. Whereas, if, like you said, if you don't have exits, if you're not giving money back, this flow is going to get more and more challenging. The LPs will start questioning, and then, the party has to stop at some point.
So I mean, you mentioned calling people out. Do you mean publicly, or at least within?
Just a quiet reference call. Before you invest in someone, just call, people who've known them in the past, find out how they've dealt with their employees. Were they good managers, good leaders? Were they, were the numbers are kosher or not?
Yeah, I mean, I've experienced that too, where I've had conversations with people and would get a very positive opinion of a certain founder, or even in some cases other investors, and then later on you find out like, well, that wasn't really accurate, or it was complete opposite of accurate, actually. Yeah, no, I agree. I think that's a.
Then once the funding happens, no one wants to talk about it because your money is already at stake.
Yeah. Good point. I'll get that.
Yeah, I mean, I think what as VCs, generally what we can do is also, I think, work closely with corporates to really bring about, I think, innovation, and have some very deep, I mean, as Rahul mentioned, specialized funds with kind of deep research and innovation happening there. But kind of working with partners already, whether it be corporate partners or other institutions, which not only bring about, say, innovation, but also a path to exit for the portfolio, right? I think if we do that more in a more disciplined, streamlined manner, it'll be good for the overall portfolio. Of course, there's very limited that we can, I guess, influence regulation in India, but I think for the VC environment itself on the whole, if it was more pro-business and the regulations were more in favor of what we're doing, that would be great as well for the VC environment. And I think, of course, I agree with Rahul as well in terms of doing more robust due diligence. I think a lot of times some of the deals come from very known close networks, given how close and small the ecosystem is. And sometimes we might miss out on doing some more deeper due diligence, right? Which might backfire later. So I think all these things is something that we can look at.
Fair enough. I think we can run another hour with additional conversation and questions. But before we end the stream, I want to just ask both of you for some advice, both for founders that want to contact you and work with you. What is some advice that you can give them before they approach you? And some advice to other emerging managers or people that are running syndicates on AngelList and want to kind of graduate to becoming a VC manager. So 2 pieces of advice. Ankita, you want to continue?
Yeah, sure. I mean, just from I think for entrepreneurs and founders, just I think advice is that, really look into, first of all, build or create a solution which is unique, which is actually solving, a real world or real market problem, which can really be scaled up. Because only when it's really scalable, really solving a problem is that it's venture investable as well, right? That's very important. And also to kind of look up your investor before you pitch. There's always a particular investor out there for you. Do your research, put your effort in when you're looking for the right investor. And also, I mean, before you go to an investor, it's good to kind of showcase that you have a team, people believing in your idea. You have some relevant advisors and mentors on board, and not just people on your website, but people who are actually adding value to your company and working with you, right? I think all that makes a difference. And I think for new managers who are raising money out there, again, I think it's good to have a focus, to have a team in place which has, the right elements, whether if you're, the technology, global exposure, entrepreneurial experience. I think it's very important for both founders and for fund managers to have that entrepreneurial, passion and characteristic and zest to, I think, really build it out, right? And I think for both founders and fund managers, network is really important. Networking, meeting people, talking about your ideas, getting people to believe in you. I think that makes a difference.
Great advice. Rahul?
Yeah, most good founders don't need advice, and I had that situation the best because we have very little to give. But I would give 2 at the cost of speaking too much. One would be where I think that what Jeff Bezos does at Amazon, I'm going to use that, which is day one. I think that's very, very important, irrespective of where you are on the funding cycle. Maybe you got a $200 million valuation, but I think it's very important to be let's use the word humble in just saying that there is a lot of paths to go yet. I think the ambition shouldn't be more when fundraising, but it should also be on a daily basis.
Yeah.
When you're hiring people, the kind and quality of people, when you're dealing with your employees, it is not a short journey, it is a very long journey. Dealing with customers, same story. Dealing with investors, same story. So day one actually helps you recalibrate a lot of relationships as well, besides just feeling excited and energetic. It just says that you are in it for the long haul and everybody else is there. It's going to be around for a long time as well. I think for managers, I think a lot of deals are happening where the round is coming together like a club deal. There is either a round where nobody has any room to come in because one big check has come in, or there is 4 or 5 investors writing smaller checks to put a round of 15 million together. I think so. What it means is that we all need to reach out a lot and understand, check sizes, call each other, use each other's diligence, move quickly on deals, because I think the ecosystem clearly is, either very large funds or funds which are not large, right, which have to write checks in the sub $5 million range. So I think there has to be a better ecosystem in making sure we all understand and work together and find ways to to do things together more proactively than not.
Okay, cool.
I agree. Yeah.
Thank you both. If you want to continue, I'm free to continue, but I'm sure, it's dinner time and family and all that. So thank you both for doing this. I think it was a great conversation, and I definitely learned a lot from both of you. If you guys want to hang out for a couple of seconds afterwards, I'm just going to end the live stream and we could just wrap up behind the scenes.
So thank you, Pankaj. Thanks. Awesome. Really enjoyed this.
Thank you. Thank you. Thank you so much.
Thank you, Pankaj, for having us. It was great. Yeah.
Thank you. Thanks again for joining us on InvestStream Live. Next week, we are doing a fireside chat with Rob Go from NextView Ventures, based out of Boston and New York City. So join us then. Thanks.